Warren Buffett knew things were going to end bad in 1999, just before the tech bubble. He's seen telltale signs: market overvaluation, margin debt at an all-time high, so many different speculators in the market creating a lot of bubbles inside the market. Is he telling or is he predicting the future events of what's going to happen in the future very, very soon? In this interview, you can see that Warren Buffett actually kind of called it in this Nightline interview in 1999, just before the bubble crashed. So let's get into this video of Warren Buffett talking about what he sees in the market just before the tech bubble.
It seems to me that you are the very opposite of the typical internet investor today. I mean, I have sort of images of these kids hunched over their computers, buying one minute, selling the next minute. That's not you.
I don't have a computer at the office for me. I mean, there for other people there, but not me.
You don't use a computer?
I don't have a computer. I use it at home to play bridge, but I don't use it in the office.
Because?
It's of no utility. I mean, all I'm trying to do is buy a piece of a business at an attractive price, and the computer doesn't tell me how to do that.
Are you a little bit nervous when you, I mean, I understand you're a very tolerant person who probably is willing to let anybody do what they want to do, but as you look at what's happening to Wall Street today, the incredible, I mean, companies that go up 100, 200% over a week or two, and then maybe drop 50% over a day. Does that make you nervous?
Well, it's more exaggerated now than most of the time in the past, but we've had a lot of speculative activity and all kinds of things over the years in markets, and it frequently doesn't come to a good end, but it'll be with us 100 years from now, just as it was with us 100 years ago.
Well, it's just a lot faster now.
There's a lot of action, and people are day trading and that sort of thing. The one piece of advice I'd give them is don't do it on borrowed money.
But many of them are.
I know.
I mean, they're buying on margin.
Yeah.
Some
of them will come to a bad end on that.
Because?
I hope. Well, because things don't go up forever, and a lot of the valuations strike me as extreme. And if you own them on borrowed money and they go down one day, you don't get to play out your hand.